Welcome. The following presentation will review the performance of the ATM Trade Alert Service. Tomas will guide you through analyzing the first 3 months of the service and what's next. But first, a reminder. Aeromir Corporation and Tomas Byron are not a broker-dealer or investment advisor. The content given by Aeromir Corporation is strictly for educational purposes only. Options, futures, bonds, and currencies involve risks and are not suitable for all investors. Past performance is not necessarily indicative of future results.
Okay, let's proceed with the presentation here. Okay, we're done with the disclaimer. So during this presentation, we will discuss briefly the market environment, the trade selection so far, the performance of the alerts, and what we're going to do moving forward, and what we learned in these first 3 months. Well, before we proceed with the analysis, let's review briefly the rules, or what is the trading frame that guides the alerts. And it's, as you know, a follow up of the workshop um, strategy. And let's go a little bit faster. So the first rule, as you know, and the only rule, it there are no fixed rules. So that means that we will adapt always to the market conditions. So this is probably the greatest assets that option trading offers compared to some other form of trading. So following the workshop and the classes, the trade alert is a natural integration with that and follow the same principle for this strategy. So let's review very briefly what is the core system, if you want, that we follow. As you know, we trade based on statistics and probabilities. We define risk, and we try to stay as close as possible to a short holding time for any position. We seek positive data. We're seeking optimum premium. We try to achieve a profit target between 5 and 20% of the debit paid. And on the holding period, the market condition was such that unfortunately we had to go overnight, as you will see, not every time, but let's say most of the time. And also because of this, we had to lower size and scale out in and out more often than previously thought. Here you see just what we defined during the work classes, what is the selection of trades that we are seeking. So you can, there's nothing has changed from the initial plan, and we kept following these guidelines. We started after the workshop was ended, and that was probably the last week of February, and that's when the trade alerts started. And this last past 3 months have presented significant challenges for traders and investors, especially if you compare this with previous year. The market was more difficult because, and I will show you shortly some charts. There were a lot of factors of uncertainty, global events, wars, changing economic conditions, uh, and expectations that the Federal Reserve will have cut interest rate, and they didn't, and they were supposed to cut 4 times, and so far nothing has happened. So, despite all this, with few adjustment, the ATM alert service has performed as per normal, with some adjustments, and the results will hopefully keep the same shape in the future. This is a chart of SPX on a longer frame. It's a daily chart. The middle section here represent the volatility for a 9-day, the 30-day rolling, the 3 months, and the 6 months. As you can see, the market has some spikes in volatility, but in general, were stable during this uptrend, and from a peak here, most likely decline in line from this point moving forward. But even with the decline in volatility, there were some down bars here, down days, and the market. In a way, this is most notably, you see the market here, volatility spike, market comes down, but volatility decrease anyway. Next. In the second chart, we zoom in the period, um, the last 3 months, when you can see that volatility was steady for most of the time. Then headed in the first two bar here, a spike, but in general, in this follow up, the spike will decline and will keep coming lower with the new uptrends. But as you can see, the average true range of the daily bar, and in general, the down size of this bar has increased. Also here, this indicators here, this is the previous week fixed line of the expected move for the week taken from the SPX volatility. You can think of this like what the market expects, the range that the market expect, the following week pricing, and these lines are printed on and not changed on the last day of the previous week on Friday. So we print these lines. So if we remain in the range, let's say that the option market was properly priced. But if we get out of the range or we swing in the range, it needs more adjustments for us. And it means that any position center around the yellow line here would have needed some recenter adjustment and so forth. And especially interesting is, we take overnight exposure to verify if there are gaps into this, if the hedge was possible during the day, the normal regular trading hours, or if some of the gaps occur overnight, like in this case, where not using a broker that offers you extended trading hours capability would have definitely upset the next opening and force you to enforce the alert to take some extra measure like recenter, adding, scaling, and sell out. As I just mentioned, one of the challenges compared to last year was related to theta decay. As you know, we seek to profit from theta decay by doing time spreads. This year was a change from last year because most of the decay happened actually overnight, as we show in the previous chart. And during the last quarter, basically, if this theta decay increases percentage overnight, this, if you don't have a trading set up with a broker that offers you overnight participation, that by the way is increasing in volume and is perfectly functioning, will give you a dilemma whether to cut the position at the close or go with more risk. This is obviously valid for short DTE, And that's one of the reason why, because most of our members are trading out of thinkorswim and charles schwab now, that doesn't offer that capability. So the we had to adjust a little bit the kind of position we take, keep more money in reserve, decrease a little bit the size, as I previously mentioned. So probably for those of you that trade interactive broker, this wasn't a factor because you can manage your position overnight. Again, I'm not encouraging. As you know, we select to trade using these two brokers that are the number one and number two in the U.S. Option market and in general in the brokerage products available to us. But there are some advantages and disadvantages choosing one or the other. Let's talk now of the now almost 3 months old broken Thinkorswim problem. As you know, we've discussed this many times during the chart and other venues. But still, the moment of recording this, the problem is still there. So this for a trade alert service that rely a lot on graphical visualizations and giving you instructions to trade over Charles Schwab. It has been a major factor and a break in putting positions because understanding of your profit and losses and adjusting the graph for some of you has been daunting. So this hopefully is going to be resolved, but we've taken few actions like try at least to design our own system. It's still in the pipes. It's still not ready. You understand this is a complex task. Unfortunately, again, this is inconsistent, unreliable. Traders have, all sort of problems, and hopefully this is going to be resolved. So again, let's note that whenever you put a position on using thinkorswim, you must be aware of this problem. You have to try to adjust it in a possible manner. I've been trying to subscribing to other services to provide you a graphical visual representation of the position we are on as alerts. One of them is Option Strat. But to be frank with you, I don't encourage anybody to subscribe to the service because it's very difficult to put in. It's good for theoretical stuff, but it's very difficult to put in and adjust positions, and they will make the thing very difficult for you to follow. And by looking at that, put it this way, the modeling part has some nice feature, but is like most of this software available misleading, because as you know, if you go back to the work classes, it is almost impossible to forecast the future implied volatility, the premium, the various Greeks, and so forth. So if you rely too much on what you see on your graph without adjusting, unfortunately, especially talking about time spread, you're going to be disappointed. And worst, you probably not going to be able to understand the forces behind this. Once again, I encourage, if you have any doubt how the implied volatility affect these positions, to go back to the fundamentals and to the work classes and take another look at some of the material we share, because a good fundamental understanding of the forces behind this strategy will guide you through many different positions that you can take and expand from this this expand your experience in various market conditions. Let's analyze now the performance and the result for the first 3 months. This P&L line uh, was included, and during the classes and the workshop, it is the result, last year result for 3 months, September to December, for my one of my personal accounts. And as you can see, the pretty good result with a few fortunate drawdown. But it's important to notice that this performance is more or less in line with the performance from the trade alerts. Note how to read this. This again includes commissions and all the rest. And one important number here is the profit factor and the Sortino ratio of the drawdowns. The trade alert started with $25,000, the minimum. I would think to trade a strategy like this, but again, if you trade a smaller amount, you can exactly copy the same trades using XSP, that is 1/10 of the full contract. The net profit so far is about $7,000. It's about 28%, and these are the metrics. This is a detailed breakdown of every single trade, and I'll tell you roughly the metrics of the capital required. Most of these trades, this is the maximum. It's capital required because you buying time spread. So the maximum, you had to pay the premium for the spread and resell it higher, hopefully. This is the starting trade. And this is the last trade. This is how I keep track, just taken as an example, some of the trades. As you can see, some were required a lot of action, some were more, put it this way, less chaotic. Somebody said, "Oh, this is chaotic, I can't follow." I understand, but the market here, we take a proportional risk reward, but we need to adjust. We need to adjust until it's possible to adjust, and eventually, when it's not possible anymore because the time runs out or the premium is not good enough, only then we'll take a loss. Adjusting, flexibility, and it's a dynamic game. So it's the key for option trading if you want to achieve results. As I mentioned before, the market conditions were such that we had to adjust a little bit the DTE already. But going forward, we will find and we will analyze the market. I mean the underlying and the volatility to find longer days to expiration trades that will require less active presence. Possibly reducing adjustment frequency of the adjustment, and that will overlap with more active kind of trades. So I will find a way to communicate to you what kind of trade is this. As I mentioned probably many times, I will always try to put layering trades in a way that they compensate or integrate each other, so that one, if you like, will be a sort of edge for the other. But at the same time, they will work independently, because you may be into one trade and not into the other. So, but if that is possible, that will be one of the guidelines moving forward. I think that it's been happening already, but as I mentioned before, not everybody was able to stay, in a position, or to and this is, it's up to you to take positions or not. I will try just to put more position on, and there will be a variety of positions that, and you will pick the one that suits your time, your capital, and your desire for taking risk. As I mentioned before, adapting to market condition is essential for successful option trading. So obviously you have to adapt and you have to stay out of the market when is the outcome is foggy, or and a reminder again, we are not trading the underlying, we are trading options here. So our P&L, obviously the underlying price vis-a-vis the delta, is a very important factor. But this kind of strategy, they start from, that's why we call it the at the money. The at the money, why the at the money? Because as you know, at the money offers the best risk reward ratio. So, but that needs adjustments. So we will constantly monitor opportunities in the market. But one message here is important to understand is that we try not to put the same position over and over again mechanically, because if you do that, you don't play with the risk on, risk off factor. You don't adjust your risk to the opportunities that arise at the moment. And obviously, it is very important to keep money on reserve for further adjustment. So trade more frequently with less capital, and adapt to the market conditions, and size in, scale out. These are key factors in trading options, and they are a recipe for success. Talking about tools to implement this strategy, or in general any other strategy, we already share with you the basket order, basket trader that can be effective, putting order or monitoring orders with interactive brokers. Uh, we're still working on a visual risk graph software using Excel, still in the making, not far from the from being produced. Put it this way. And there is another one that I will introduce to you shortly with the video, and I will be talking a bit more in details about that. But let me show you what is like. This is not the final version; it's still in the making. This is basically it is a tool using Excel that will monitor, and the feed here is DOS. Will monitor your position, automate the selection of some of the time spreads, right? Giving you some metrics, and this calculation here for the Greeks will be handled independently, not following the metrics from Thinkorswim. From Thinkorswim, we will take the price at the moment, and probably we can do this further down the line with interactive brokers as well. And then we'll record. Let me go back. Okay, this will record some of the metrics. Starting on your. It will record also overnight. You keep this running, and it will record and save the metrics for further analysis. Here you will have the fix and the floating. The floating is what the market is at the money, where you center, let's say, a calendar, double calendar, or straddle, or whatever. And this will be your fix. Once you fix this, you will compare the performance. And I see every minute here will stamp print the numbers. So at the end of the day, you will have a record of whatever your strategy is. Following this can be further analyzed. Obviously, in this spreadsheet, there will be graph and other visualization. I would say that this is going to be ready probably next week. And I will have a trial on this. I will have a presentation on this. And this will be given always as a priority at a special price. It's not going to be, it's going to be one time. There's been a lot of work involved into this. It's going to be one time fee, and then you can make it yours with some flexibility. Obviously, the work class and the trade alerts will have a special discount on this thing, and it's going to be priced reasonably. I'm not going to make a profit out of this, but You have to realize that this has been a lot of work involving other people and the staff, not only me. So, conclusion. We'll do our best to give you the an opportunity to learn, about options with this following this strategy. And I'm very glad that I started this year, and I'm really grateful for your support. And let's another note. Let's try to make in the private Discord channel. I see that some of you lost, say the I wouldn't say the interest, but produce some ideas, share ideas between yourself, because taken from me, I'm the one that received the money from these alerts, but and I'm trying to be honestly, I'm trying to be as much as I can neutral to my position. I'm not in love with my positions. It's like I would like some debate to be more active in that channel if you have time, obviously. So thank you again, and if you have any specific question, please, this is my Aramir email. Send me a line, and I will be more than happy to answer any other question. Goodbye.